Most of the people out there still have not been jarred into realizing what precious metals represent, even though you got a whale trader holding 50 million ounces long in silver contracts, where the central banks are buying more gold than at any time in history. And all of this chaos is around us. People still think that the road to retirement is paved only with dollars and mutual funds and stock certificates. And, I don't know when they'll wake up or what will happen when they do. But if you do see an event, those premiums will go right back to where they were. This is as good of a buying opportunity as I've seen literally in all.
Good day, and welcome to Economy Express, your go-to source for the latest insights on global markets, precious metals, and economic trends that impact your financial future. Today, we bring you a special report on the silver and gold markets, featuring a deep dive into the expert analysis of Andy Schectman, CEO of Miles Franklin Precious Metals. What does the shifting financial landscape mean for you?
Silver, there's a massive silver whale on COMEX who has 50 million ounces in contracts on the long side. Is he going to take delivery? It's in the others category. It's not a commercial bank. It's not a managed money. It's the others, the ones who have been draining COMEX all these years. We saw 200,000 ounces come out of GLD last week. 1.5 million ounces of silver come out of SLV last week. Where's that going? Who's taking that? There are things that are happening, but it makes me believe it's part of a bigger picture. As Ted Butler would say, he said the metal is being sent to places of more urgent need as opposed to plain vanilla investor liquidation. So yeah, all of these things fit into a bigger picture. And that, to me, is my fixation, I guess. It's interesting because you listen to Ted Butler and he'll tell you there's a massive shortage in wholesale 1,000-ounce bars on COMEX, and the bleed down off the LBMA and COMEX in particular is making it so that, there is a big shortage, but yet it's the most flush the retail market has been since 2020. Now, does that ultimately trickle down into the retail market? Sure, absolutely could. If the bank on Friday night, U.S. Bank Heartland, had failed and been bailed in, as I expect we will see. Look, there's over $1 trillion worth of commercial real estate loans that have to be reset this year and next. 70% of which are owned by the regional banks. 60% are delinquent. What happens when some of these banks go upside down? When these small businesses, of which these regional banks hold 70% of the loans, go upside down and walk away from these non-recourse commercial loans, and these banks go upside down and these banks get bailed in. How fast will that change? It'll happen overnight. We added 14,000 clients in March and April in 45 days when the banks failed and they were bailed out, and they're not supposed to be bailed out. The law in the Dodd-Frank Act said they're supposed to be bailed in. At what point do these banks stop cannibalizing the smaller banks because their balance sheets become too big? For people who want barter, this is the only thing I would ever buy if I weren't buying silver. A lot of people who listen to this show probably have been buying silver forever, may not own much in the way of gold. The 1/10 ounce gold eagle of every coin I've ever sold across the board, numismatic or not, is maybe the only coin that has always maintained a significant premium above its melt value. Buy or sell. They are made in tiny quantities. They are hugely demanded. And I figured I'd switch it up a little bit. The 1/10 ounce gold eagle, $37.50 over spot. Of course, you divide that by 10 over its melt value is an easier way to do it. Take the price of gold, divide it by 10, add $37.50. They're 2023. They are brand new. But look, anything from silver eagles to junk silver, to silver rounds, to silver bars, they're the lowest I've sold them for in over 4 years. Same thing is true with every company out there. Everything is on sale. But in particular today, the 1/10 ounce gold eagle, I have hardly done any gold in 3 years because silver is the best value. It still is. But I wouldn't count gold out either. And to put a little allocation into some small barterable gold coins, not a bad idea. If you want silver, we have tons of it at really great prices.
And And why is now being called one of the best buying opportunities for precious metals in years? Stay with us as we break it all down. Silver has long been an asset of intrigue and speculation, but recent market activity suggests a shift that investors cannot afford to ignore. A major market player, referred to as the silver whale, has quietly accumulated a staggering 50 million ounces in long contracts on the COMEX exchange. What does this mean? According to Andy Schectman, this level of accumulation signals confidence in silver's future price appreciation and underscores growing institutional demand. Meanwhile, gold continues to be snapped up by central banks at an unprecedented pace, further reinforcing the global pivot towards safe haven assets. Adding to the intrigue, reports from the Commitments of Traders (COT) data show unusual movements in silver futures. A significant managed money trader has taken a short position amounting to 10,000 contracts, approximately 50 million ounces of silver. Could this be a deliberate attempt to suppress silver prices, or is it a temporary move in an increasingly volatile market? Either way, such dramatic positioning signals turbulence ahead. Another key indicator pointing towards market shifts is the substantial withdrawal of assets from gold and silver exchange-traded funds, ETFs.
Issue a gold-backed currency on the 22nd. And people are focusing too much on the Brics. Now, from me, that must sound kind of weird because it's been all I've talked about for the past 2.5 years. However, it is a big deal. It's a huge deal. The Brics, ultimately, I believe, the catalyst, if you will, for further and much more severe de-dollarization, but it won't happen on the 22nd, whether or not they issue a gold-backed currency. I do believe that ultimately they will issue, whether it be a commodity-backed currency or a gold-backed currency. When you focus on the Brics alone, you are only getting one half of the story. The growing coalition certainly makes the Brics more powerful and makes them more formidable. But it is Saudi Arabia, to me, that is the linchpin of it all. You must speak of Saudi Arabia when you speak of Brics and of the massive ultimate de-dollarization. And to me, it is the linchpin of the dollar hegemony. Saudi Arabia and OPEC, all of the OPEC countries being on the Belt Road, all of them, will issue a statement, and that will be something like this. Listen, you guys are going green you sign an executive order. By 2050, you plan to be completely green. And look, we've partnered with the Shanghai Cooperation Organization, with the Brics, with the Belt Road, with the Eurasian Economic Union, with the New Development Bank. We told everyone in Davos that we are going to take other currencies. You've known this for a while, but why would you care? You're going green. The rest of the world is not. All of their pieces will be in place when they make this announcement: protection, agreements, all of these things. And when you realize they're being protected by what amounts to 2 of the 3 largest nuclear arsenals in the world, they become very formidable. GDPs, when put together, that are far greater than ours, becomes very formidable. When that announcement is made in conjunction with all of these countries who have unified, in conjunction with the belief and realization that they will issue a commodity-backed currency, and Saudi Arabia says, hey, we've decided to take the new Brics settlement currency for oil purchases, or until the new Brics currency is operational, we're going to take the yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. You add Saudi Arabia to the Brics and look at all of the countries who Saudi Arabia and organizations whom Saudi Arabia has already applied to, it becomes a whole lot more of an interesting story. And so, yes, I do believe the Brics and their growing coalition of countries is a very big deal. But when you add these other countries to it and bring Saudi Arabia into the picture.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing...
In just 1 week, the GLD fund saw 200,000 ounces of gold withdrawn, while the SLV fund experienced an outflow of 1.5 million ounces of silver. Analysts are divided. Some believe investors are shifting capital into equities and bonds, while others suspect the metal is being moved into private holdings as economic uncertainty deepens. Schectman aligns with the latter perspective, pointing out the ongoing depletion of wholesale silver supplies and the systematic drawdown of precious metal reserves. He notes that while retail silver remains widely available, institutional silver, such as the 1,000-ounce bars held by exchanges, is vanishing. The London Bullion Market Association, LBMA, and COMEX inventories continue to decline, painting a picture of a tightening market that could soon impact retail investors as well. Could we be heading for a major silver supply squeeze? Time will tell, but the warning signs are clear. Beyond the metals markets, another pressing concern looms: the fragility of the U.S. banking sector. According to Schectman, the risks within regional banks could soon escalate into a full-scale financial crisis. Over $1 trillion in commercial real estate loans are set to reset within the next 2 years, and a staggering 70% of these loans are held by regional banks. Even more alarming, 60% of these loans are already delinquent. What happens when small businesses and property owners default? Regional banks, which have been the backbone of small business lending, could face collapse. If these banks fail, we may witness the rapid implementation of bank bail-ins, a scenario where depositors, rather than the government, are forced to cover losses. Schectman recalls that in just 45 days during the 2023 regional banking crisis, 14,000 clients flooded into Miles Franklin, looking for alternatives to traditional banking. If another crisis unfolds, precious metals could once again become the asset of choice for wealth preservation. The conversation on financial security isn't complete without addressing the growing geopolitical realignment. One of the biggest stories unfolding right now is the potential shift in global trade dynamics due to the Brics alliance. The question everyone is asking: will Brics introduce a gold-backed currency to challenge the US dollar? While many speculate that an announcement could come soon, Schectman warns against focusing solely on this development. Instead, he points to Saudi Arabia's deepening ties with Brics as the true linchpin of de-dollarization. If Saudi Arabia officially joins Brics and starts accepting alternative currencies, such as the Chinese yuan for oil transactions, it could mark a turning point for the global monetary system. With the world's leading oil exporters shifting alliances and establishing trade agreements outside of the dollar system, the demand for US dollars could weaken significantly. The implications? A potential decline in dollar value and a surge in demand for alternative stores of value, including gold and silver. So, what does all of this mean for you as an investor? Schectman's message is clear: those who understand these shifts and act accordingly will be best positioned for the future. Precious metals remain a critical hedge against economic uncertainty, and with silver still at relatively low prices, now could be an opportune moment to enter the market. He also highlights the importance of diversification, not just within metals, but across financial assets. While silver has historically been undervalued, Schectman notes that certain gold assets, such as the 1/10-ounce gold eagle coin, have consistently held high premiums, making them an attractive option for those looking for smaller, more tradable units of wealth. The economy is changing, and the global monetary system is evolving before our eyes. Will you be prepared? Share your thoughts in the comments below, and let us know if you think silver is on the verge of a breakout. If you found this report insightful, be sure to subscribe to Economy Express and hit that notification bell to stay informed on the latest economic developments.